Midway through 2025, and the question on everybody's lips is, are there still affordable suburbs in Australia with big potential for capital growth? I'm Tim Graham, and the Property Playbook starts now. In this episode, I'm joined by Terry Ryder, founder of Hotspotting, to unpack the latest insights from the Cheapies with Prospects reports. If you're looking for smart investments without the $1 million price tag, this episode's for you. Terry, thanks for joining me again.
Always a pleasure to talk to you, Tim.
That's all right.
Particularly about real estate.
Very good. Why don't we start by explaining to our viewers what exactly is the Cheapies with Prospect reports?
Well, we've got two of them. We've got a city edition and a regional edition, and essentially it's to identify for people the places where you can buy affordably, but with good prospects for growth. The key word is really prospects. We're not advocating that people rush out and buy any cheap area they can find. It needs to be a location that's got the underpinnings for the credentials for capital growth. And we're finding that increasingly people are chasing affordability and finding it harder to find those places that are affordable because we've had so much price growth in the last couple of years, particularly in some of our capital cities and many of our regional areas. So people are finding it hard to get into the market at prices that are attainable, but also the record shows that the best growth is across Australia is happening in the cheaper areas, the regional areas, and also the cheaper capital cities or the cheaper parts of our bigger cities. So it's a dual objective really. It's where you find the best growth, but it also allows you to get into the market with that what we call the winning trifecta, the win-win-win in real estate, which is affordable, high yields, prospects for growth.
Okay, and the key word there is affordable. Is there a definition behind the word? I find that really interesting that it's often talked about in real estate circles. We're looking for affordability, but what's that actually mean in terms of a median price?
That's a great question because I'm always criticising politicians who like to stand in front of cameras and say we're going to build 1,000 affordable homes over here, but they never put any numbers to it because they know damn well you can't actually build dwellings these days and sell them at affordable prices because the costs of construction are so high. So in terms of the definition we use for our city report, we're looking for locations where median prices are below 600,000 and for the regional areas below 500,000. We've actually had to adjust those numbers upwards in the last couple of years because we've had so much spectacular growth in so many parts of Australia, places that have featured previously in these two editions of the Cheapies reports.
Okay. Well, why don't we dive into, let's start with the capital cities. Where are the cheapest, are the best locations in the Cheapies reports for the capital cities?
Yeah, well it's kind of convenient for both home buyers and investors looking for those affordable options that the two smallest and cheapest capital cities are two of the markets that have really come quite strong in the first half of 2025. Darwin has come from nowhere to become the hottest market in the country in about 6 months. So it's the most affordable of our capital cities and the one with the best rental yields by far. So it's good news for both investors and home buyers looking for a lifestyle change that you can buy very affordably in Darwin and have good prospects for growth. But Hobart is also mounting a major recovery, keeping in mind that over the last 20 years, Hobart and Tasmania have been two of the three best locations in Australia for capital growth over that longer term. So that's all good news for people looking for affordable options with prospects for growth. But the other options we're highlighting in this report tend to be unit markets because increasingly I think investors looking for affordability in our capital cities need to be considering apartments. And the good news there is that they're performing much better than they have in the past on capital growth. In fact, they're outperforming houses in most locations across Australia now.
That's really interesting. I mean, if we think about the last 20, 30 years, I think it was back in the 80s when units were actually outperforming houses, and we've now seen that come back to fruition. So it really goes to paint the picture that all markets are cyclical, not just property markets, but also the markets within markets.
Well, change is a constant in real estate, and I like to think that what we do at Hotspotting is we're in the business of the science of detecting and analysing change. And I think there's too many people out there that have very hard and fast ideas of what works in real estate because it's worked for the last 10 years or the last 5 years, and the assumption is that change never happens. But what we know to be true is that we're always finding change, and one of the big changes in recent years is that regional markets have been outperforming capital cities. And now this new paradigm is emerging in the last 1 to 2 years, and I think it's here for the long haul, that apartments are starting to outperform houses on capital growth because more and more cohorts are actually opting for attached dwellings, not just for affordability, for all sorts of reasons. So in our Cheapies with Prospects City Edition, we're highlighting inner Melbourne as a place where you can very affordably buy units in great locations, close to important things like universities and hospitals and the CBD. And also in Perth, where the house price growth is starting to grind to a halt after 2 or 3 really strong years, but you can still buy very affordable units in local government areas like Belmont and inner Perth and have good prospects still for capital growth there.
And interestingly, across the 10 locations that you've picked for this this edition of the Cheapies, 5 capital cities and 5 city markets and 5 regional markets, the only place that a Western Australian location features is the inner city market of Perth for units.
Yeah, I mean, it's undeniable that the Western Australian boom has passed its peak and starting to wind down. And every passing month we see the rate of price growth in Perth dropping and dropping for houses, but there's still pretty good growth happening for units. There's still people out there who feel they want to get into the Perth market. We kind of telling them that I think you needed to be there 2 or 3 years ago, but some people still want to be there. So our advice is to look at the unit market, but with the proviso that we're not suggesting people buying 30-storey high-rise where the body corporate fees are very high. We're thinking more boutique.
And something still got a bit of scarcity.
Yeah, that's right.
Okay, and moving on to the regional markets, where are we seeing the growth in the regional markets?
Well, we keep talking about South Australia as the unsung hero of Australian real estate, but maybe it's not so unsung because the price growth data for the last 12 months and for the last 5 years, South Australia features really strong. And Murray Bridge keeps popping up as like leading the nation.
Yeah, wow.
Now, we had that location in our Cheapies reports like 2-3 years ago, and we're so pleased to see that it's performed so well for investors that followed that advice. A great location, it's still growing. So we do feature 2 locations in South Australia in this edition. Mount Gambier, which is a location we like a lot. It's the biggest regional centre in South Australia. It's got all those qualities that we look for: a strong, diverse economy. It's growing. It's still affordable, and the rental yields are pretty good. The other places that we include in the regional edition reflect the fact that we're seeing a big recovery in regional Victoria, despite everything, and also a recovery in regional Tasmania. And I know that you recently visited Launceston, which is a great market for people to consider. But in this edition, we're actually focusing more on Burnie, which is a little bit cheaper than Launceston, smaller than Launceston, but it's got some major growth drivers.
Yeah, probably worth noting the only reason Launceston didn't fit in there is because the median price is slightly higher in a lot of those more favourable suburbs.
Yeah, it does have some more down market areas which would qualify for our definition of cheapies for the regional edition, but a pretty down market and maybe areas to be avoided. For people with a little bit more money to spend, Launceston is a great option because it's a very strong regional city, diverse economy. It's had a great record in the past, and there's some major investment coming into Launceston that we've highlighted recently, including a $2 billion project that's going to really create a lot of jobs there.
Yeah. It's worth noting with a lot of these areas, it's you can look at the median prices and you can say, well, what type of property can I buy for that median price? And it varies so much across each of those locations.
Yeah, the median price is just a bit of a guide. People need to keep in mind that a median price means that half of all sales are less than that. So if the median price looks like it's outside your range a bit, keep in mind that half of all sales are less. So you might find something in your price range, but you also have to consider the quality of what you're buying and where you're buying it. That's not to say that you can't get great growth in cheap areas. All the research that we do shows that some of the best growth that you can get anywhere in Australia in the last 12 months, the last 5 years have been in those cheaper areas, but you just got to be careful that it's got to be more than cheap. Cheapies with prospects. The word prospects is really important.
And leading the way in the cheapies with prospects for the regions was Ballarat.
Well, that's right. Regional Victoria has mounted quite a notable comeback in the first half of 2025. It's had a great track record on the past. It's been struggling a bit because, well, fundamentally the state government's not so friendly towards property investors. Highest taxes in Australia for investors, and the regulations that govern the relationship between landlords and tenants is particularly unfriendly to landlords. So it's deterred a lot of investors, and I think the figures say that Victoria's lost 24,000 rentals in 12 months for that reason. But despite all of that, regional Victoria's making a comeback. I think it's the value for money. Ballarat prices have dropped for the last 2 years. Great track record in the past. Very strong regional city, well connected to Melbourne. It's got a future. And so there's really good buying there. So we think the time is right to be getting into that market. And alternatives include Bendigo, very similar. Geelong, a little bit more expensive, but the recent data on the regional movers index, people moving from one part of Australia to another, Geelong has just overtaken the Sunshine Coast to be the biggest recipient of people moving from the big cities to regional areas. So it's got some prospects.
I think it's worth noting in a lot of those regional centres as well, and it's hard to believe, if you go back a couple of years ago, the price that you could buy in areas like Queensland and South Australia, where you could buy for $500,000 and still be in close vicinity to a local Woolworths and a modern home. You just can't seem to do that in a lot of markets, but in Geelong and Ballarat, you've still got those houses that could be under 10, 15 years old and still within a good stone's throw for some of those major infrastructure projects.
Yeah, and great prospects for future growth. I mean, I've always been a fan of the city of Greater Geelong. It's got so many credentials, a really strong economy, lots of diversity. It's successfully transitioned from the old economy. It used to be they used to make cars down there, and they had smokestack industries. That doesn't happen anymore. It's now about education and medical services and information technology, and it's really made that transition very successfully. Well connected to Melbourne. It's a lifestyle location because it's almost surrounded by water, being on a peninsula, and well connected to its capital city. So it ticks a lot of boxes.
Very good. And finally, for somebody who's entering the market today on a budget, quick tip for them, what would you say?
Look, I think broaden your horizons a bit. Be aware that the regional areas show the best growth, and the top 10 in Australia for the last 5 years, a lot of places maybe you haven't heard of. They're all smallish regional centres, but they've all got strong, diverse economies and infrastructure spend, which is really important, and some lifestyle elements. So keep all that in mind. And if you're thinking capital cities, again, broaden your horizons a bit and be willing to consider units and townhouses.
Very good. Very wise words. Thanks, Terry. Thank you for joining us. Folks, that's the play for today. This program's been brought to you by hotspotting.com.au. This is Ticker. We'll be right back.